For thousands of years, one metal has stood at the center of wealth, power, and security: gold. Governments hold it in their reserves. Central banks track it carefully. Ordinary people buy it for savings, for weddings, and for times of crisis. But there is a deeper question here. Why gold? Why not iron, or copper, or aluminum? Why do nations and families trust this specific yellow metal to protect their wealth across generations? In this video, we will look at gold from three angles: its physical properties, its role in the global financial system, and its psychological power over human beings. If we want to understand why gold became money, we must start with something very simple. What kind of object can work as a store of value? To function as a reliable store of value, a material needs several key features. It must be durable. It cannot rot, rust, or disappear. It must be divisible. You can break it into smaller units without destroying its nature. It must be portable. You can move it across distance. It must be rare, but not impossible to obtain. And it must be recognizable. People should be able to identify it easily. Now, look at the periodic table with those conditions in mind. Iron is everywhere, but it rusts. Copper is useful, but it oxidizes and changes color over time. Aluminum is extremely common and too cheap to store large value in a small space. Some metals are much rarer: platinum, palladium, and others. But they were discovered late in human history and never became part of everyday life for most people. Gold, on the other hand, is different. It does not rust, it does not corrode. If you bury a gold coin for 1,000 years and then dig it out, it will look almost exactly the same. It is also relatively soft, which means it is easy to melt, stamp, and shape into coins, bars, or jewelry. At the same time, it is rare enough to be valuable, but not so rare that societies cannot obtain it in meaningful quantities. From a purely physical perspective, gold almost looks like it was designed to be a store of value. Early human societies did not start by saying, "Let us create a monetary system." They were attracted to gold for a simpler reason. It looked special. It reflected light in a unique way. It stood out from stone, wood, and other metals. It became a natural choice for jewelry, religious objects, and symbols of status. Once gold became associated with beauty, prestige, and power, a second step followed. If something is widely desired and limited in supply, it can easily become a medium of exchange. Gold moved from decoration to measurement of wealth. Kingdoms collected it, empires fought over it, and merchants used it to settle large transactions. Over time, gold coins became a standard way to express value. Even when paper money appeared, it was often just a claim on a certain amount of gold stored somewhere else. Today, we live in a world of digital payments, complex financial products, and fiat currencies. Yet, central banks still hold thousands of tons of gold in their vaults. Why? Because gold plays a very specific role. It is nobody's liability. If a country holds another country's currency, like dollars or euros, it is indirectly exposed to that country's decisions, its interest rates, its inflation, its political stability. Gold is different. A bar of gold is not a promise by a government. It is not a bond that can default. It is simply a physical asset, accepted almost everywhere, with a deep historical track record. In moments of geopolitical tension, financial crisis, or loss of trust, gold functions as a kind of ultimate reserve. It does not depend on a central bank's credibility. It does not require an internet connection, a payment system, or a clearinghouse. For that reason, many states see gold as their final line of defense in a worst-case scenario. The logic for ordinary people is different, but connected. When inflation rises, when local currencies lose value, or when the future feels uncertain, people look for something tangible. Gold offers several things at once. It is physical. You can hold it in your hand. It is socially accepted. In many cultures, you can use it in weddings, gifts, and savings. It is transferable across generations. A gold bracelet can move from grandmother to mother to child. In many countries, families do not think of gold as a speculative trade. They think of it as a form of long-term protection against uncertainty. Psychologically, this matters a lot. A number on a bank screen feels fragile. A piece of gold feels real. That feeling of reality is one reason gold remains so powerful in personal finance, especially in societies that have experienced high inflation, currency crises, or rapid devaluations. Of course, gold is not the only asset available today. Investors now have access to stocks and bonds, real estate, exchange-traded funds, and even digital assets like cryptocurrencies. Each of these has its own risk profile, return potential, and role in a portfolio. Gold is not a productive asset. It does not generate cash flow like a business or rental income like a property. Its main function is different. Gold acts as a hedge, especially against extreme scenarios such as deep currency crises, loss of trust in institutions, or systemic shocks. That is why many investors do not see gold as a way to get rich quickly, but as a way to reduce overall risk and protect purchasing power over long periods of time. Underneath all of the economics and chemistry, there is something more subtle, a psychological contract. Humanity has collectively decided over thousands of years that gold means stability, prestige, and security. This shared belief gives gold a special status. Even when the financial system changes, even when new technologies emerge, gold retains its symbolic and practical value. Will something eventually replace it? It is possible. New technologies, new forms of digital scarcity, and new financial structures are emerging. But for now, gold remains one of the few assets that connects ancient history with the modern economy in a continuous line. To summarize, gold became and remained a store of value because its physical properties make it durable, portable, and recognizable. Its historical role turned it into a symbol of wealth and power. States use it as a strategic reserve that does not depend on any other country's promise. Ordinary people see it as a tangible shield against inflation, crisis, and uncertainty. Gold is not perfect. It does not solve every financial problem, but it continues to answer a very old human need, the need to protect value across time, across borders, and across generations.